Let's look at Bitcoin prices this morning. Oh my God, there might not be another interest rate cut. Better sell some Bitcoin. There it is right now, down 598 at 87. We'll talk about where it's been with Anthony Pompliano, founder and CEO. I was looking at Coinbase, got as high as 300 back in 21. Then it went all the way down to 30. Then it got all the way up, Anthony, and then we'll get to Bitcoin, all the way up to almost 400 again. Now it's almost been cut in half again. So very volatile, down for the year. Bitcoin is now down for the year and down 30% from its highs.
Well, you know what I think is happening here is I've been an investor in Coinbase since the private markets. And one of the things that's really interesting is they're going after this everything exchange. They basically want you to be able to buy public stocks, crypto, prediction markets, perps, everything on one exchange. But also, if you see Robinhood is doing the same thing. Coinbase came from the crypto side, Robinhood came from the brokerage side. You also are starting to see now the traditional exchanges and the traditional financial players. You know, Larry Fink recently said that artificial intelligence and tokenization are the two big themes of finance going forward. Right. So what's going to happen here is everyone is going to meet in the middle. They're all coming from different areas, but ultimately they are all fighting for who is going to live at the center of artificial intelligence, crypto, and ultimately these everything exchanges where people can trade whatever they want, whenever they want, 24/7. And so I think that the key for public market investors is trying to figure out who's going to get there first and who actually has the most durable business. Now, Coinbase has somewhat of an advantage. They have 100+ million users, and they've come at it from a crypto-friendly standpoint. Many of these technologies are using that crypto plumbing, and so having kind of a head start in the crypto side is going to be a big advantage. But I would not discount the traditional players. These people have a lot of money, they're very ambitious, and they understand the regulatory apparatus. And so you're going to have this kind of cutthroat competition, and ultimately the winner is the individual investor or the individual citizen, because they're going to get lower prices, faster market access, and ultimately better pricing on these different opportunities. Bitcoin
was 125. There were people talking about 150 by the end of the year, or even higher than that, and then long term over $1 million a coin. It hit a bump in the road on the way to some of those numbers, right? Took a wrong turn at Albuquerque or something. You point out what it's up 100% in 2 years?
Yeah, I mean, look, I think that there are a lot of Bitcoin investors that are disappointed that Bitcoin did not go to 150, 200, 250. I mean, take your crazy number that people were predicting. At the same time, we have to remember Bitcoin is up 100% in 2 years. It's up almost 300% in 3 years. It has been compounding. The compound annual growth rate of Bitcoin over the last decade is 70%. This thing has been a monster in financial markets, but it has volatility. And so one of the aspects of Bitcoin that people aren't talking about is that the volatility of Bitcoin has actually been coming down. And so we didn't get a blow-off top that I think people expected in kind of the end of Q3 or beginning of Q4, but we also haven't seen the big 80% drawdown that people normally expect as well. Now, who knows what's going to happen in the future? You could see the Bitcoin price go down a little bit more, or you could see it turn around and start to kind of grind up going into the midterm.
Could you see it go down a lot more? You said a little bit more.
You could, but I think given where the volatility is right now, it would be very surprising that Bitcoin's volatility has drastically compressed, and yet still you could get a 70 or 80% drawdown.
Well, the charts was in the 70s that Katie Stockton talked about. That was when we were still over 100. She was talking about after the first break under 100, I think.
One of the most interesting kind of theories, if you will, that I've heard is Matthew Siegel, who's over at Van Eck. He basically explained, he's like, look, if Bitcoin's volatility got cut in half, then rather than get an 80% drawdown, you would expect something like a 40% drawdown. That's about what we got from the $125,000, $126,000 price point down to around $80,000. And so, again, does that mean that's what's going to happen? Not necessarily, but I do think that this compression of volatility means that the holders will be a little bit disappointed on the upside because you're not going to get those blow-off tops, but also there is some degree of safety or a persistent bid on the bottom side where you're not going to see these huge, 75, 80% drawdowns as well.
So what is that hasn't happened yet can happen for Bitcoin, either with regulators or Washington or I don't know, security-wise, more adoption, sovereigns. What's the next? There's nothing on the horizon, really. Is Washington still matter? Do you need that legislation? We don't have it yet, right?
Again, if we go back to this idea of artificial intelligence and Bitcoin or crypto are kind of the two big areas where the future of finance is, what I believe is going to happen here is I think that AI and AI agents are going to be offense. They're going to go out and they're going to make money for these companies. You're going to start to see AI applied inside of these financial firms, and they're going to start to automate away tasks and then eventually jobs. And they are going to be that offensive force to go and drive revenue. But then what's going to happen is that these companies are going to take that capital and they're going to go and they're going to stick it into crypto on their balance sheet. You can think of Bitcoin and crypto as the defense and actually protecting that purchasing power. Now, what I find very interesting is that that defense, some of it's going to be Bitcoin, some of it's going to be stable coins, some of it may even be tokenized gold. But I think that this combination of these two technologies is really where the finance is going. And you see it from the startups, but also you see it from the large firms like BlackRock.
And how long? For years?
I think that you're going to see these companies start really announcing stuff over the next 6 months.